Oil is at 1 month lows after a rise in a recent report showing oil inventories are up in the States and concerns that OPEC won't be able to reach a consensus on where the cut in production can be made that it promised back in September when the cartel met unofficially in Algeria. OPEC holds its next formal meeting in 4 weeks' time, the 30th of November. Richard Mallinson leads analysis of geopolitics, international affairs and energy at the independent research consultancy Energy Aspects. He joins us now with some more analysis. Richard, welcome. Winding the clock back to that statement from the Algeria meeting for OPEC when it did, as I say, I use the word promised, a cut in production. Did it call that too early, do you think?
Well, OPEC really wanted to give the market a signal that it was ready to act. A lot of work had been done behind the scenes over the summer before that meeting, and the market certainly responded very positively. We saw prices move up, $5, $7 over the month following that. But it did leave itself a lot of work to do between the end of September and the end of November, and that is proving harder than maybe even the OPEC members realised back in Algiers.
What is harder? What's made that job harder now to reach that consensus?
Well, I think the single biggest sticking point at the moment is the Iraqi position. So Iraq has always been, or for many years has been outside of the quota system. It's been growing its production. The Saudis want it to come back inside. But straight after the Algiers meeting, Baghdad came out and said, we don't even agree with the numbers you're trying to use to baseline our production. So there's been a big dispute about how to even measure the starting point, let alone whether Baghdad agrees that it should cut production, because it says we're fighting the Daesh militants, we need more money, we should be exempt from a cut. Then you have Libya, Nigeria, which are both going to be exempt under the deal, have been doing successfully in raising their production, and you have Iran, which is sometimes agreeing to a freeze and sometimes not agreeing. So there's lots of different problems for the group still to work through.
Let's take Libya and Nigeria. I mean, how much extra oil are they likely to bring onto the market? Yes, we've got some more disruption, I know, in Nigeria, but the oil production seems to be going well now in Libya. How much extra oil is that going to bring onto the market that you say is excluded from any OPEC deal?
Well, this is a big uncertainty, and I think when the group met in September, the expectation was that any increases would quickly fall apart because of the instability in both countries. I think that's still quite likely, but at the moment, Libya's roughly doubled its production to about 600,000 barrels a day. Nigerian production's probably back up to about 1.8 million barrels a day. That's enough extra oil compared to September that it would largely offset anything the Saudis and the Kuwaitis and the Emiratis might be able to remove. So that's another headache for the group in terms of how much can it actually bring down production.
But is Saudi Arabia really wanting or able to cut production? It's got a lot of strains on its own balance sheet and it relies on the oil income, even at these low levels, in order to feed money into the political system in Saudi Arabia. It doesn't seem like a country wanting to cut production.
I think how I would characterise it is Saudi Arabia is ready to cut, and it's been ready to cut right the way through the last couple of years if there is a genuine deal and if other members of OPEC are all willing to participate. The problem has always been everyone wants to be exempt. And the Saudis, remember, hit a record high in production over the summer. So they'd be cutting from a very high level, and their threshold is probably 10 million barrels a day of production. They can go down to that level. They're very unlikely to be willing to go below it.
You said the word if there is agreement amongst other members. Is there really agreement? Because it's not just Saudi that's in a difficult corner, it's other oil producers as well within the OPEC group, and that's disregarding non-OPEC members, which I know also want to continue pumping.
Absolutely. I think there are lots of reasons you can be cautious, lots of reasons we might not get a deal at the end of this month, but I also think the market has swung maybe from excessive optimism in October to excessive pessimism at the start of November. They still have a month to work out these problems. They also still have that really big pressure of wanting a higher oil price, needing a higher oil price for their budget. I think that's a very good reason for them to keep trying to make a deal work at the end of November.
And of course, if oil prices do start to rise, then of course we get extra oil onto the market from the US frackers. My understanding is it's quite easy for them to turn the operations back on, and they'll just continue to pump oil into the market anyway.
That's true. I mean, it's probably a 6 to 9 month delay between bringing a rig back in America and it starting to produce. And it's only some provinces in America that are really profitable or successful at these kind of price levels. So I don't think we should expect a sudden flood of American oil back, but certainly there are signs that we might be bottoming out in production. We've got some rigs coming back, and if prices were to go to 55, 60 for WTI, then I think you'd see more activity the second half of next year. You'd see more US oil coming back into the market.
Oh, okay, let's take a look at the US crude oil price. I think we can bring up a chart on this. The point I think we've got to mention is the fact this is the point here where OPEC said that it hoped to reach an agreement. As you say, then we went over $50 a barrel. I think it topped out at around about the 52.30 level. Here we are now at 46.14. Do you think the risks are now that we could see $40 a barrel again, or is there a chance that we could well see this oil market go back up to above 50?
Well, I think there are two drivers here. One is, of course, what OPEC does or doesn't manage to do. If OPEC comes out on the 30th of November with no form of deal whatsoever, we could definitely be testing back to the low 40s, even 40 for WTI. I think if we do, however, see some sort of agreement, even if it's not everything that the market might be looking for, that will be relatively supportive. The other thing is the path and the trajectory of US crude inventories, because alongside the OPEC talks, what we had was a series of draws unexpected to the market in US inventories over October. And then, as you mentioned at the start, indications we might be getting a build this week. That's not unusual in the peak refinery maintenance season, but the market is very sensitive to signals from inventories in the US, to North Sea floating storage position, these markers of whether the market is still building stocks or whether it's starting to draw them. So OPEC is a big part of the story, but I think we also need to watch the inventory numbers.
Yeah, okay, look, we'll leave it there. But Richard, thanks indeed for joining us. Richard Mallinson is there from Energy Aspects.